BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top trade. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi.
Good morning, everybody. 8 o'clock Saturday. Nothing better to do than to look at charts straight away in the morning. Well, I have been up for hours, obviously. So let's have a little look at the three main things. Traditional markets, Bitcoin and Ethereum. Because obviously we all know that altcoins are completely wrecked at the moment. So we've got to look at the big bad boys to see if they're going to go down any further. Because it's only these guys which are in control of the market. Most altcoins are going to continue to go down or up based around what these two things are doing. Three things if we include the S&P. So we'll start with Bitcoin. So Bitcoin managed to make its way down to the bottom of this box. The major box. I call it the box of significance. Now, we're below moving averages on the 4-hourly. Below moving averages mostly on the daily. You've only got the 200 simple and exponential, which are all the way down here in the mid to upper 50s. Scary business. And on the weekly, we're still messing around with toying with the idea of closing above that 10 exponential, which again would be, pretty bullish. But if we do break down, it's only a little bit further to go before I would call what could be considered a potential bottom, which is your 20 moving average, 63,200, 21 exponential, we'll call it 61,000 flat. So these two areas would be the next on the list to perhaps maybe scrape out a low. But at the moment, we're bouncing from the trend line and technically above the 10 exponential on the daily. So benefit of the doubt, until we see it come down lower, we could be looking for a nice little bounce around here, a nice little bounce. Now, same sort of deal going on for Ethereum. Ethereum is still in the midst of a golden cross and a massive uptrend, really, on the daily. When we're talking about supports, it's basically the same thing. A 10 exponential has managed to be, we're currently closing above it. If we close this way, by the way, if we fail to close this way, well, we had a little attempt to it yesterday, didn't we? The 20 simple moving average, 3,288 or thereabouts. 21 exponential, 3,200. So, look, as far as these two charts are concerned, they're still massively bullish, right? They're massively bullish. They're less volatile. On the way down, at least, that would be. I mean, we had a very big move on Ethereum, but on the way down, very small compared to the majority of altcoins. Most altcoins yesterday, 5 or more percent. Bitcoin 1, 2, 3%. So you understand what I mean. These are the ones that are going to move the market. They take the vast majority of market cap from all the other alts, and whatever these guys do, to the downside at least, will be emphasized by the other alts. So most charts don't look like this. They don't look like this either. Most charts don't look like that. Most charts are just in massive downtrend consolidations going to wreck city. And there's no stopping them. The only thing that will stop them would be hopefully scraping out a low on Bitcoin. So let's have a think about other things. Let's have a look at the S&Ps. SPX closed yesterday, 4-hourly, good. Daily, pretty good. Bit overheated, I have to say, but no divergence, but a little hot. And weekly, well, the weekly is still banging, obviously. We had the overheated read on the money flow index here with one drive of bearish divergence on the money flow index, which caused this pullback into the center of the Bollinger Band. Then we went on for a V-shaped recovery, made a new all-time high, and we don't really seem to have anything to be concerned about at this very moment in time. It's crazy, really. It's crazy, really. Because this is the sort of expectation you would have for something like Bitcoin. Bitcoin should have been moving like this as well, because stocks, or should we just call it indices like this, continue to make new all-time highs because the trading environment is generally okay. We were talking about CPI going down. The boys at the Fed said, we're not going to change rates. It's not a big deal. Keeping it neutral is not actually a big deal. Indices weren't phased by that. They weren't bothered. But for some reason, Bitcoin couldn't handle it. Or is it that Bitcoin wanted to come down anyway? It is an individual chart. It doesn't have to do exactly what stocks do. So what I'm trying to put to you now is that the overall trading environment is generally okay. for stocks at least, but for crypto, it doesn't like it. Now, we've got the DXY sort of moving on an uptrend at the moment now, so this is something that we all got to think about. So we had that move down on the CPI, so we got that right. We saw the move down, retest the breakout area where we've ricocheted from and bounced back up, hit the take profit one, not that I was trading it, but you know, major resistance part 1, major resistance part 2 is on the cards, maybe at some point next week. There is no pump signal on this daily, so you know, we are looking at this in the form of a trend given to us by a golden cross over here and a breakout over here. So we'll be looking for, you know, we are probably looking for this to move up to 106.4 and maybe even break from there, and if that is the case, then we'll be looking for 107.7 and perhaps maybe even beyond. So it's at that point where the overall trading environment does shift. And look, I suppose there is evidence to say that it's shifting already. But at the moment, you know, we are getting rejection from here. And we're at the mercy of, well, Forex is at the mercy of all the other aspects outside of charts. Fed, CPI, core inflation, you know, non-farm payroll, blah, blah, blah. All this stuff that's going to keep coming out. And like I always say, the best way to get a handle on all of that is to look at the price of oil. It's boring, I know, but if oil breaks out from here, for me, I would probably say, all right, that's it then. That's fine. That is it. Let's literally just leave most things alone and try not to overtrade or go crazy, because if oil does break out, goes back above 83, it should be going to 93, and at that point maybe even back up into the hundreds. This is all thinking, looking forward. This isn't me calling for anything. We're on the verge of these things maybe starting these trends. We haven't confirmed anything yet. At the moment, Bitcoin, Ethereum, still quite bullish. Obviously, stocks, still quite bullish. Oil, you know, I suppose it's a higher low. It's also a lower high. So, we don't really know. And DXY, although it has broken out, we are at the mercy of many things outside of this chart. But if you were to base it on the chart, then it does look like it wants to go up another increment. So, the trading environment, although is relatively bullish based on their own charts, and that is true, there might be a shift coming over the next month or so. Which is enough to sort of like take a step back, which is fine. We've had a step back for a little while. Yesterday I did deploy some money into that dip, as I said I would, buying into a few altcoins for the long haul, building up that portfolio, because all part of the overall view that I've got on the total too, which is something that I suggest you watch. I made a nice video on this whole market and where the projections are going to be looking forward in the next year to year and a half. I urge you watch that video, because it saves me having to repeat the overall plan with every video that I make. But long story short, accumulate within this box. You know, altcoins. This is the total too. You accumulate altcoins as we meander through this little range, and then leave it. Leave your portfolio to make you some money over the next year to, it's about 400 to 500 days from now. That's where a peak probably should be starting to get carved out, or looking to hit some kind of peak in around 400 to 500 days from now. So you build the portfolio down here as we go lower and lower through the use of dollar cost averaging, and then you sell on the way up between 300, 400, 500 days from now. It's relatively simple. It's maybe too simple, but sometimes simplicity is the key. Right, there is nothing much more to say. So at the moment, Bitcoin holding, that's good. Ethereum holding, that's good. If we go down further, that's also good. Opportunity, good. It's all good. Remember, I've been 70% in cash since March. Now, I've actually deployed a little bit more, so I'm a little bit more exposed today than I have been for months, for many months. So that's, I suppose, if there's any sort of chirpiness around my language today, that's why. Because I've waited long enough for this dip, and we finally got it, and I've taken advantage of it. And I'll take advantage of the next one too. Right, I'll leave it with you there. Thank you for watching. Hope you have a nice day. Take it easy.